Hello everyone, and welcome to your Money Your Way YouTube channel. In this video, we're going to take a deep dive into the case study of Cera Sanitaryware Limited. Don't forget to hit the subscribe button and turn on the notification bell to stay updated with our latest videos. Cera Sanitaryware Limited is a company that makes and sells products for buildings. They have 4 categories of products: bathroom products, kitchen products, tiles, and wellness products. They have different brands like Cera, Senator, ESVA, JET, and Senator Cuisine. Their products include things like sinks, showers, tiles, and more. They have big stores called Cera Style Studios in 8 cities, and other smaller stores owned by dealers and retailers. They make their products in a big manufacturing hub in Cuddy and also have other businesses in packaging and polymer products. Let's discuss the revenue mix of Cera Sanitaryware Limited for the financial year 2022. The company's revenue is divided into 4 segments: sanitaryware, faucetware, tiles, and wellness. The revenue mix for these segments is as follows: 53% for sanitaryware, 33% for faucetware, 12% for tiles, and 2% for wellness. Sales growth. In financial year 2022, the company made a net sale of 1,445 Indian rupees crores, with a growth of approximately 18% from the previous year. In 9 months of financial year 2023, the revenue was 1,270 Indian rupees crores. The company raised the prices of its products by 3% in the sanitaryware segment and 5% in the faucetware segment in May 2022. Sales in the residential segment continued to be strong due to new project launches and replacement demand from home improvements and renovations. The company launched 59 new products in H1 financial year 2023 and introduced 614 products, including 496 from the Luster series, in Q3 financial year 2023. The new products launched in the past 3 years contributed to 39% of the top line in Q3 financial year 2023. To continue to grow, the company will need to introduce new products with better design and functionality that can be sold at higher prices. EBITDA growth. Let's talk numbers. The company's EBITDA was 228.7 rupees crores in financial year 2022, up by 44.71% from the previous year. In Q1 of financial year 2023, EBITDA was 62.8 rupees crores. During this time, there was a surge of about 2% in key raw materials used in the sanitaryware segment, which makes up more than 90% of the raw material mix. Additionally, there were price increases in some ancillary cost items such as transportation and corrugated boxes. In the first 9 months of financial year 2023, the company's EBITDA stood at 205.7 rupees crores. Raw material prices for sanitaryware, such as China clay, feldspar, and plaster of Paris, increased by 5% to 7%, while prices for faucetware raw materials like zinc decreased by 6% and brass decreased by 1.4% during the quarter, and by 10% during the first 9 months of financial year 2023. PAT growth. In the last financial year 2022, the company made a profit of 153 Indian rupees crore, which was about 52% higher than the previous year. In the first 9 months of financial year 2023, the company earned a profit of 147.9 Indian rupees crore, and the tax rate was around 26%. EBITDA margin. In the last financial year, the company's earnings before interest, taxes, depreciation, and amortization (EBITDA) margin increased from 12.9% to 15.8% due to lower expenses and higher revenue. As of 9 months into the current financial year, the EBITDA margin was at 16%. With the launch of new products, the company's margins are expected to improve even more. The company introduced 72 new sanitaryware products and 573 new faucetware products in financial year 2023. The management has forecasted a yearly improvement of 50 to 75 basis points in operating margin in the upcoming years. In Q3 financial year 2023, the company introduced a single maximum retail price (MRP) for its products across the country, which resulted in a 0.5 to 1% increase in sanitaryware product prices and a 0.5% decrease in faucetware product prices in some markets. PAT margin. In the last fiscal year, the company's margin increased due to higher profits. As of 9 months in the current fiscal year, the PAT margin was 11.6%. ROCE. The company's return on capital employed has been consistently strong in recent years. In financial year 2022, the ROAS went up to 20.6% due to a 49% rise in EBIT, while the increase in capital employed was comparatively lower. This led to a higher ROCE to ROE. In recent years, the company's ROE has been declining due to low profits and an increase in net worth. But things turned around in financial year 2022, with ROE rising to 16.2% thanks to increased profits. Cash flows. In financial year 2022, the company generated around 98 Indian rupees crores from its operations, which was a decrease of about 63% as compared to the previous year. The company's cash flow from operations was impacted by an increase in inventories and a decrease in trade receivables. The company also spent about 82 Indian rupees crores on buying mutual funds, properties, plants, and other fixed assets. The cash flow from financing activities, CFF, was negative at approximately 10 Indian rupees crores, which included payments for short-term borrowings, lease liabilities, interests, and dividends on equity. Debt to equity. The company has very little debt. As of March 31, 2022, the long-term borrowings were around 5 Indian rupees crores and short-term borrowings were around 21 Indian rupees crores. As of September 30, 2022, the long-term borrowings were around 5 Indian rupees crores and short-term borrowings were around 19 Indian rupees crores. PE ratio. Cera Sanitaryware Ltd's TTM PE multiple stands at 42.15x in the current market. Dividend yield. In the financial year 2022, the company gave its shareholders a final dividend of 20 Indian rupees for each share and a special dividend of 15 Indian rupees per share. The earnings per share were 116.18 Indian rupees. So, the dividend payout ratio was around 30%. Shareholding pattern. In the last 9 quarters, the promoter holding in the company remained steady at 54.48% as of Q4 financial year 2023. During the same period, the FII stake increased to 18.03%, and the D2 stake increased to 9.73%. The top public shareholdings include Nalanda India Equity Fund Limited with a 9.98% stake, Tata Flexi Cap Fund with a 3.08% stake, HSBC Small Cap Fund with a 2.38% stake, Government of Singapore with a 1.98% stake, and Canara Robeco Mutual Fund with a 1.67% stake. Sector potential. India's sanitaryware market was valued at $1,060 million in 2020 and is expected to reach $1,651.9 million by 2027, growing at a rate of 6.7% over the forecast period of 2021 to 2027. The market is divided into different product categories such as toilet sinks, toilet seats, bathtubs, faucets, wash basins, urinals, showers, bathroom accessories, vanities, bidets, mirrors, cisterns, and others, among which the toilet sink/water closet segment has the largest share in the Indian sanitaryware market. Wall tiles constitute 50% of the market share among different types of ceramic tiles, followed by floor tiles, 23%, vitrified tiles, and industrial tiles. The Indian tile industry size is estimated to be around 52,700 Indian rupees crores as of financial year 2022, out of which domestic consumption is 40,000 Indian rupees crores, and exports constituted 12,700 Indian rupees crores. The residential sector dominates the demand for ceramic tiles in India, accounting for 70% market share, while the commercial and replacement sectors make up the rest of the orders. The Indian government's emphasis on affordable housing has increased demand in the industry. Future outlook. The company has been working with CREDI, which is the highest body of developers, and associations like IIA, IIID, and IPA. It focuses on innovation and development of dual-color glazes and antimicrobial glazes to create new market space. The company uses cheaper raw materials and has reduced the cost of production. They expect higher growth in their faucets business and launch new designs regularly. The company has launched the latest slabs, new designs, and sizes in both floor and wall categories for their tile segment. They plan to build a new manufacturing facility for sanitary ware and a brownfield faucetware expansion program to increase their capacity. They spent 52 Indian rupees crore on advertising in FY19 and is likely to spend 55 Indian rupees crore in financial year 2023, which is their highest ever advertising spend. Please note that the information presented in this video is based on our research on the company. The purpose of this video is to provide educational insights about the company. It is important to conduct your own research before making any investment decisions. Don't forget to subscribe to our channel to show your support and receive notifications of our future videos. Thank you for watching and stay tuned for more content.